How can you buy not just the stocks of a single company, but say a slice of the entire US economy, or the whole banking sector, or a portion of all emerging markets, or even 1/10 of an ounce of gold, all while saving on taxes, margins, and storage issues? That's exactly what ETFs are for. But let's break it all down step by step. Hi everyone, my name is Terrace, and in this video I'll explain what ETFs are, how to buy them, and which ones are the best to choose. To understand what an ETF is, let's first recall what a stock is. A stock is a security issued by a company. All investors who purchase stocks become co-owners of the company. A stock represents ownership of a portion of the company, even if it's a very small one. So, if you bought a stock of Apple, Amazon, Microsoft, or any other company, you became a co-owner of that company, even if only for a very small percentage. Why do companies issue and sell stocks? It's very simple: to raise additional capital, which can be used for advertising, launching new products, and more. If the company's profitability increases, the stock price grows as well. Additionally, many companies pay dividends on each share, but that's not the topic for today. Let's look at an example. Imagine a company that manufactures shoes. Suppose this company goes public and issues its stocks. By selling these stocks, the company raises capital to build new production lines, create new designs and models of shoes, and launch advertising campaigns. All of this leads to increased profitability for the company, which in turn drives up the value of its stocks. There are countless companies that sell stocks, ranging from the aforementioned small shoe manufacturer to giants like Microsoft, Apple, Google, Amazon, and many others. It might seem like the secret to successful investing is simple: just buy one share of each company, at least the top ones, and create a diversified, balanced portfolio. It sounds reasonable, but the problem is that the price of individual shares can be quite high. And this is where index funds, or ETFs, come to our rescue. Now, let's imagine a different type of company that doesn't produce shoes or anything like that. Instead, this company uses its capital to purchase a group of stocks from top companies like Google, Amazon, Apple, Microsoft, and others. It then issues its own shares, the value of which is based on the value of the stocks it has purchased. Such companies are called index funds, or ETFs. If a single Apple share costs $240, Microsoft $430, and Amazon $220, the price of one share in an index fund that includes all these stocks will be just $200 to $300. The secret is that you're not buying these shares in their entirety, but rather a fraction of each. It's essentially a collective purchase. So, what do we get in the end? If the shares of all these companies included in the fund grow, the value of the fund's shares also increases. In the example above, I illustrated this with 3 stocks supposedly included in a fund. However, in reality, any such fund consists of hundreds of stocks. Just imagine, you're buying a portfolio of several hundred stocks for just a couple of $100s. Here are some examples of top ETF index funds. SP includes 500 top US stocks. The current price of one fund share is $595. VTI, Vanguard Total Stock Market Index Fund ETF shares, currently priced at $294. QQ, Invesco QQQ Trust, with a current price of $522. Not all ETFs are based on stocks though. Some invest in assets like gold or other precious metals, government bonds, and much more. It's worth noting a nice bonus here. Taxation on the purchase of precious metals via ETFs is treated as a financial market transaction, not as a purchase of physical precious metals. The U.S. Securities and Exchange Commission closely monitors the activities of ETF funds, including their cash flows, payouts, reporting, and all other metrics. Additionally, launching such a fund requires an extensive array of permits, licenses, and other regulatory documents. Now, let's look at the top 5 ETF stocks that I believe make an excellent portfolio for passive investing. By passive, I mean the buy-and-forget style of investing. Disclaimer: this is not financial advice. I'm simply sharing my experience and how I choose to invest. All investments carry risks, and you could lose the money you invest. Always do your own research and invest at your own risk. My list includes ETF funds covering various industries and economic sectors. 1. SPDR S&P 500 ETF Trust, ticker SPY. This is arguably a must-have for any investor. The fund includes 500 of the largest U.S. companies. Currently, the price of a single share is about $600, but friends, owning a stake in 500 companies provides excellent diversification. Moreover, it has shown consistent growth throughout its existence. On top of that, it pays quarterly dividends, nearly $2 per share. 2. SPDR Gold Shares, ticker GLD. What could be more timeless than gold? This fund is based on gold, which has consistently increased in value for over 20 years. However, it does not pay dividends. 3. iShares US Medical Devices ETF, ticker IHI. This fund focuses on companies in the medical equipment sector. As life expectancy increases, so does the prevalence of age-related illnesses. I believe healthcare is something humanity will always need. Currently, a single share of this ETF costs about $60, and it pays small quarterly dividends. 4. Invesco QQQ Trust, ticker QQQ. This fund is based on 100 of the most innovative U.S. companies. Innovation drives our world, doesn't it? Just look at the advancements in artificial intelligence. The fund has shown consistent growth, and the current price of a single share is around $520. It also offers quarterly dividend payments. 5. iShares Stocks Europe 600 UCITS ETF, ticker XAUD. A European counterpart to the first fund on my list, this one is based on the top 600 companies in Europe. It's the most affordable ETF here, and its price has been steadily growing for over 15 years. It also pays small quarterly dividends. These funds together offer diverse exposure to different industries, geographies, and asset classes, making them an excellent starting point for a passive investment portfolio. So, we've covered what ETFs are and how they work. Now, where can you buy ETF shares? It's quite simple, on the same stock market where all other shares are traded. If you've never done this before, no worries, I'll guide you through the process step by step. First, you need to create an account with a broker through whom you'll purchase your ETF shares. There are an incredible number of brokers to choose from, but I'll demonstrate using the one I've been working with for many years, Interactive Brokers, which has been in the market for nearly 50 years. You can choose any broker you like, but be cautious. Some brokers use sneaky tactics, like adding hidden fees to transactions or placing unnecessary holds. To proceed with Interactive Brokers, you'll find the link in the description below the video. Visit their website, click on Sign Up, and fill out a simple registration form. Account activation may take some time, but it usually doesn't take more than 1 business day. After registering and activating your account, go to the Transfer and Pay section, select Deposit Funds, top up your account using any convenient method, navigate to the Trading section, or simply use the search bar to find the ticker of the desired ETF. Enter the ticker, click Buy. Congratulations, you're now the proud owner of your first ETF share. Investments of this kind are beneficial only in the long term, typically over a range of 10 years or more. This is when the compound interest formula truly shows its power, allowing your returns to grow exponentially over time. You can access a free capital calculator and see for yourself how your capital grows over time with different investment rates. The link to the calculator is located in the top right corner of the screen. I'd like to tell you about another investment tool, Bitcoin ETFs. These are exchange-traded funds that track the price of Bitcoin and trade on traditional stock exchanges. ETFs allow investors to profit from the rise or fall of Bitcoin's value without the need to directly buy, store, or manage cryptocurrency. At the moment, I'm only planning to purchase a few shares of such ETFs. As of today, Bitcoin ETFs are becoming a popular tool among traditional investors. In the US, some funds, such as ProShares Bitcoin Strategy ETF, are based on Bitcoin futures and have already received SEC approval. However, applications for spot ETFs are still being approached with caution. Well, now you know what ETFs are, how and where to buy them, which ones to choose as a beginner, and the additional types available. Don't forget to subscribe to the channel and give this video a like. Oh, and hit the notification bell too.